Hey all, welcome to ShareTrack. This is Raj here. This video is for our genomics viewers. I have a very handy slide out here which I want to walk you through to give an idea of what happened today. It was a terrible day, but those who are prepared with a lot of cash on the sidelines and free of ideology would have been able to take some advantage out here. I was able to take some advantage for the first time, and I learned a lot of new things and I practiced a lot of new discipline. I'll share that with you some subsequent day. But for now, I would like to point out that the news was doom and gloom. You can see here Dow drops 2,000 points Friday. S&P 500 loses 9% in 2 days as Trump tariff market rout deepens. And then we have Schumer blasting Trump for golf outing as the markets are melting down. It's like Nero playing fiddler while Rome burned. Then you have Trump's tariff rates for other countries radically larger than world trade. We have news reports from different parts of the world talking about an island of Penguin being charged a tariff, a U.S. military base being charged a tariff. And there are a few countries who have zero tariffs for US, and they have been hit with a reciprocal tariff of 10%. And also there are reports from various media outlets that the tariffs shown on the website was different from the tariffs that President Trump read from during his Rose Garden address. And they have now been reconciled. So it all points to a little bit of haphazard movement. And Professor Jeremy Seigel from Wharton, he blasted this whole thing saying it's pig-headed and not a good thing to do, and it's going to bring us a lot of pain. And Fed Chair Powell was non-committal and he refused to respond to any political question, but he said that we don't have enough information right now. We want to see how the policy shapes up and crystallizes and what comes out, and then we can react to it, but we can't do anything right now. So there is no rate cut or anything. And immediately, as I predicted, Trump came out and said that Powell should stop playing politics and should cut rates. In fact, I would say that if Powell had cut rates, then he would have been playing politics. So we put that one aside. Look at China imposing 34% retaliatory tariffs on all goods imported from US. This news broke out in the pre-market session, and since then the share market has tanked and it has gone down significantly. Yesterday we had a fear and greed index reading of 6. Today we are dropped down to 4. We're almost very close to the bottom, and anytime now things can change. Now, these are the main headlines for today. S&P 500 ended lower Friday amid escalating trade tensions between US and China. China retaliated with 34% tariffs on US products in response to Trump's administration duties. And Fed Chair Powell warned tariffs will likely drive inflation higher and slow US economic growth. And Powell said tariff increases will be significantly larger than expected, with effects including higher inflation and slower growth. And US economy added 228,000 jobs in March versus 140,000, which was the consensus forecast. So jobs came in much stronger, but unemployment rate also increased to 4.2% from 4.1% month over month. WTI crude oil closed down 4.11 to 62.84 per barrel, and Brent crude down 3.72 to 66.43 amid trade war fallouts. And then Wedbush Securities warns tech companies face dark days as new tariffs could reduce earnings by at least 15%. And that will reflect into the PE, and then we get a lower share price. And we are already seeing the market adjusting tech prices sharply downwards. Trade negotiations now a pressing priority for the tech sector because China might retaliate, and Europe is also looking at retaliating on US tech sector to get back for all these tariffs that have been imposed. So a few companies could be caught on the crossroads. They could be Microsoft, Google, Meta, Tesla. These are the companies that could probably face the brunt of such retribution from other countries. That said, let's go on and have a look at the market. S&P 500 futures is down 6.03%. And it has fallen below our support line during the market hours. It was just above the support line. Now it has gone below that. So for tomorrow, I think 5,000.50, or maybe, let me just click this, 5,002.25 is the support for tomorrow for S&P 500. NASDAQ futures are down 6.24% at this point of time. And we have a minor support out here at 17,376.00. If that doesn't work, then we have our next support, which is going to be 17032. So it's kind of, I would say it's a rectangle out here. Let me just put another line here to show the area of support. I'm just going, instead of drawing a rectangle, I'm just putting this two green lines. You can imagine that between these two green lines is a huge deal of support out here. Breaking down that should be difficult. But if we break down from there, I'll have to look up history and come up with new support lines. Dollar index is created a bullish harami pattern, candle pattern from the because there is a red, large red candle bar behind and a smaller green candle out here. This is typically bullish characteristic, but we have to see what happens when we open up tomorrow. Right now, our target, reverse head and shoulder target, has been met at 101.637 sometime during the day. And we have touched that point at least a couple of times, once yesterday and once today. So I'm thinking that dollar would be on the mend and will be moving upwards. Next, let us look at the 10-year yields. The 10-year yields came down and then they have gone back up again a little bit, but overall they're down 1.16%. And our target for that, based on the reverse head and shoulders, is somewhere around 3.56% or in that vicinity. That said, now let us go to the indicators. This is where the stock market ended today. S&P 500 broke through the two supports that I had mentioned, and now the third support for us is going to be 4,963.95 for tomorrow. And we closed up at 4,074.09. That is down 5.97%. NASDAQ closed down 6.07%, and this was our bear flag target, this green line that we see out here. And we have traveled quite a distance, and this is now within reach for us. We have gone through the minor line of support we had at 17,829.19. And yesterday, when I was doing this analysis, I would hardly have thought that we could cover so much of a distance so quickly. And we did that because we had a gap down and then we came down. So remember, when we meet our bear flag target or come close to meeting that target, the bounce back will also be equally violent. And bounce backs are very violent in bear market. Our support is at 17,171.38. So tomorrow, we still have the potential of bouncing even before touching this, and that bounce could be very fast. And our next resistance then would be 18,512.20. So look out for that possibility. And then we have QQQ, which ended below our line of support, which was at 424.36, and we ended up at 422.67. And post market, we are down another 0.48%, and it's still going down. Our next support after that is going to be 409.81, which is a very strong support. It's a huge area of support, and I hope we'll be able to be held back by that. The VIX was very high. It touched 45.30, and it's up 50.90% since the beginning of the day. And that is phenomenal. And that has been reflected in the share prices. Then you look at the put call ratio, which is becoming bearish right now. And gold also dropped. I think people have taken money from gold to invest in some shares potentially. Maybe that's what held the shares from going down too much. They went down and they were consolidating. I think money from gold must have gone there, but I might be wrong. But that's one thought I have. I had a very bad miscalculation with XLP. I have severe losses out there right now. I had bought 100 XLP, assuming that we are going towards a recessionary environment. But today we have this huge drop. So when the correction happened, immediately a lot of people started selling because they knew that this reverse head and shoulders pattern is now invalid. So there was a huge drop. I was not able to sell it in time. So I'm stuck with this huge loss, but I'm not selling it right now because I think tomorrow it will bounce back up again and it will regain a little bit. And I'll try to see if I can hold it for a longer period of time and recover my money, because recession definitely is around the corner. And the kind of mess that we are in overall in the market, I don't think it's going to be resolved in the next week or so. So I'm going to hold on to the XLP. It's unfortunate that I bought it a bit too early. I should have waited for the reverse head and shoulder pattern to be actually triggered instead of going in advance. I have been a bit greedy. I have learned my lesson. Next time, I'm not going to go in before the chart pattern is triggered. So that said, you look at Dow Jones, it's also gone significantly down. Russell Index is also down below the support levels that we had for the day. I usually don't talk about Dow Jones and Russell. I'm just showing you across the breadth, there has been huge damage that has been wrought. Now let's go on to look at genomics. As I said, only 3 companies have got something positive for us today. Allogene, without any reason, it has gone above the support line and it's been held down by the diagonal line of resistance. PSCB has broken our line of resistance. This is indeed a very strong performance. It went above 1.21 to end the day at 1.23. And if I look at news, there is no news as such for PSCB. It's, I think, sentimental trade or whatever it might be. Bluebird doesn't make any sense. There is a competition between 2 private equities to buy them up, and we'll see which one comes up on the top. Maybe there is a possibility of a better pricing. Who knows? Then we look at CRSP, that is CRISPR Therapeutics. It bounced off our support neatly and it stayed as predicted within those 2 ranges. Vertex was down 1.94%, stayed between the diagonal line of resistance and was able to stay above the 100-day exponential, sitting at 471.97 as we predicted yesterday. mRNA was down 2.41%. We didn't make any predictions for mRNA yesterday. Ginkgo Bioworks was down 2.28%, still above the line of support out here. Caribou Biosciences was down 2.21%, but it opened up much lower during the day and created a green candle. And we still have resistance for tomorrow at 0.8227. And then we have Illumina, which managed to stay just above the line of support. The technical analysis works. You can see that we had the support here and the candle just stopped out there, pierced a little bit below and came back up again. ARCG was just a straight line out here with a very little body as such. So it was very range bound and it was down 3.75%. And it managed to stay below the line of support out here, which we had from before. And it now becomes a resistance. So it opened up below and it stayed below. Intelia was down 3.77%, still below the diagonal line of resistance out here. Altimmune was down 4.93%, and there was no prediction for Altimmune. I didn't do anything. Verve was down 5.85%. Beam was down 7.23%, managing to stay just above the line of support that we had drawn, and the resistance continues to be 17.38 for this stock, and the support continues to be 15.01 for this stock. Iowa was down 7.69%, still firmly below this diagonal line of resistance. And Editas was down 8.04%, still below the diagonal, below the horizontal line of resistance, and the 9-day exponential moving average, which jointly formed a very strong resistance. And Unicure was down 8.10%. It has fallen out of this diagonal line of support, and it's fallen out of the bull flag that was created, and it has now converted that line of support into a line of resistance. This was actually a bull flag because we had gapped up and then we had come down there. I was hopeful that it will open up on the upper side. The bull flag has failed. So now the support is going to be 7.92. IMTX is the next stop. It was down 8.82% and it has remained below the horizontal line of support, which sits at 4.17. Grail was down 10.57% and it has managed to pierce through this diagonal line of support from a previous bear channel, and in the process converting it into a resistance. So that is going to be the resistance for us tomorrow, and it's going to be at 22.14 for tomorrow. We have closed at 22.25. So if we open above 22.14, I'll continue to mark this as a support, but right now this is going to be the resistance for tomorrow. That said, we have Prime, which was down 12.42%, and I don't want to plot any more lines of support. I don't know even if I can find any of those. So this is a dismal state of the genomics, my friends. I feel for your loss, and I feel for the pain that you're going through. If you're a long-term investor, don't panic. Some of these companies like CRISPR and Illumina, Unicure, probably those companies might come out well on the other end, but for the others, I don't know. We'll have to wait and see what happens. But most of the times, bad days do not last for too long unless we get a stagflation. I think recessions don't last that very long. We'll be able to bounce back in 8 to 12 months and we should be okay. But long-term investors can find a lot of deals in other sectors, but not in genomic sector. That's the unfortunate part of the message. But friends, stay strong. I wish you all the best. And try to join me on the live stream in the morning at 7:45 a.m. Eastern time. I'll do it again on Monday. I hope you guys have a great weekend, and I'll catch up with you again in the next video. Bye for now.